Bombay Stock Exchange Brokers Forum was incorporated in the year 1993. BSE Brokers Forum is a society under the Societies Act 1860 to support and coordinate on behalf of Brokers Forum. It facilitates for the smooth functioning of trade and business. It is the link between the regulators and other government bodies relating to the markets. Brokers Forum has time and again come up and made representation for the larger interest of communities. India is seeing and experiencing an economy so dynamic and ever-changing that Brokers Forum is acting as a facilitator in filling the gaps so that the business may shore up their competitiveness and enhance their global reach.
Hi friends, I'm Sagar Tanna. I am from TSS Consultancy Private Limited. I am a certified anti-money laundering specialist, and I'm going to be talking to you today about PMLA, anti-money laundering, what are the obligation of a stockbroker, and what are certain very key items on the implementation of a good AML program. I will also be speaking on the objectives and certain very specific areas like risk profiling and STR. Okay, let me first start with a very basic introduction to PMLA. The Act, as it is called, is PMLA 2002, which is Prevention of Money Laundering Act 2002. Somewhere about July 2005 is when this act came into force, and it is under this act that financial institutions under various categories are expected to be compliant to certain measures which are called as anti-money laundering measures. Friends, being stockbrokers, in the capital market, this is one type of category which needs to be compliant. There are other categories like depository participant, like NBFCs, banks, money transfer companies, foreign exchange houses, and even insurance companies. So there are multiple different categories who are all under the PMLA Act playing a certain role and meeting their obligations. Talking about the objective of the money laundering, I think it's important for us to first know what exactly is money laundering. Friends, as the word itself says, laundering, money laundering means, you have proceeds of crime. In simple language, we also sometimes call it as black money. The intention is to say that any money which is earned or gained from unethical sources, when that money is brought into the system, this process is called as money laundering. Like how we do clothes laundry, we just clean up the dirt and make them clean. So when money is brought from this form into the system, in that case it is called as money laundering. Friends, money laundering has a lot of effects which are extremely bad for our society, and governments across the world are facing this as a very big challenge today. There is an organization called as FATF, which is the Financial Action Task Force, which has close to about 36 members. India is also a member in this Financial Action Task Force. One of the key objectives or the sole objective of this organization called FATF is to fight money laundering across the world. A lot of regulations, compliance and measures are introduced by FATF, and it is the members of the FATF which then have the responsibility of implementing this compliance in their respective countries. So India, being a member of FATF, has the responsibility of implementing these measures. There are a lot of advantages to becoming member of FATF, which also means that India is recognized as a preferred destination for financially large clients or other institutions across the world who would then look at India in a positive manner as it is an FATF member. Not complying to FATF norms, India could be placed in as a high risk jurisdiction, which could also mean that doing business with other countries would become more difficult, or getting investors from outside India would be more difficult. Let's come back in terms of understanding, at the ground level, what is it that a broker, which I will use the word now as a reporting entity, is supposed to do. Friends, in a nutshell, whether it's a broker or a casino or a bank, all of these institutions which are having customers, a very large customer base, and are involved in day-to-day financial transactions of their customers, are all expected to monitor the transactions of their clients, monitor or know their customers. Whenever they see something suspicious, something unusual, they are expected to send this information about this customer and the transaction to FIU. FIU means Finance Intelligence Unit. This is placed in New Delhi and is under the direct reporting of the Finance Ministry. Now this agency, as we call it, which is the FIU, is a central repository to gather all such suspicious information which is sent across by so many different types of reporting entity, out of which one is a stockbroker. Once the FIU receives this particular suspicious bit of information, they would then act as an agency which could distribute this information to other agencies like the Enforcement Directorate for further action and so on. Okay, now that is in a nutshell about what is the main objective or the main obligation that a broker needs to do, is to file this information to FIU. This information which we send to FIU is called as Suspicious Transaction Report and is commonly known as SAR, which is Suspicious Activity Report, or STR, which is Suspicious Transaction Report. Now friends, when we talk about filing a suspicious transaction, the next question that comes to our mind is, how do we understand, or what is a suspicious activity? Most of you might think that this is something that is best left to the banks, or it is the banks where they accept cash and brokers never accept cash. Then what is suspicious about a broker? The second understanding that you may have is, as a broker, I am ensuring that the money is coming only from that client's registered bank account. In that case, I have verified that it is coming from that person's account. Then what is anything else? The third is, we are doing a KYC, we are doing an in-person verification. Then what is the need of, why do you think something suspicious can happen? So the answer to each of those is that yes, you are doing an in-person verification. B, you are ensuring that the client pays you only in check or RTGS, ensuring that the funds are only coming from client's own bank account. But what you're not probably doing, or what is required under PMLA, which is the single largest thing, is to check whether the client's background. For example, is the client, coming from a terrorist organization, or is it that the client is bringing money from his own funds, but do you ask yourself, can he afford to bring so much money? Right? So these are the key questions that a broker needs to ask for every client of his or every transaction of the client. Let's now come down to a little bit more detailed in terms of what are the different components that need to be in place for having a good anti-money laundering compliance. Right? Friends, there are broadly 4 pieces here. The first component, as I would call it, is the screening component, where before you onboard a customer, there is a compliance to check whether this particular customer belongs to any terrorist or organization or has a criminal background. Let's get more specific here. There are 2 lists which have been mandated by SEBI, and these are called as sanctions list. These are available on the United Nations Security Council website. You can just search for them by saying UNSC 1267 and UNSC 1988. It is these 2 lists which you need to check before you onboard a customer, and these lists do not have a PAN number. So you are expected to put the name of the customer, the date of birth. If the customer has given you a passport, you can also enter his passport details and see whether it matches with any record in these 2 files. So these are 2 which are mandatory to be checked before you open the account, and these are available free of cost on the United Nations website in multiple formats. The next screening needs to be done to know whether a person is a politically exposed person or not. Let's assume you get a match on a client matching with the sanctions list. If there is a match, you need to immediately file an STR and notify the FIU that you have a person who is matching with the list, with the sanctions list. And let's take the second type, which is you got an account of a politically exposed person. In that case, the compliance says that it cannot be opened under a routine procedure. It just needs an additional approval by the senior management. Who is a senior management? Now that is something that can be put into the PMLA policy or a document that you have. That also brings me to one important designation in this PMLA compliance is the principal officer. So friends, your organization must be having a person who is termed as the principal officer, but it could be different, it could be the same person. The principal officer is the key person who's responsible for the complete AML implementation. You also need to register with FIU as a reporting entity, and under the category called stockbroker if you are a broker. If you're a broker of multiple exchanges, for equity segment, only one registration is enough, which is the stockbroker. If you are also a derivatives member, then one registration, like a derivative member is required. If you are also a depository participant, then another one, which is depository participant, is also required. So if you are a brokerage, which most brokerages are today offering depository, equity and derivatives, then you will require 3 different registrations. So that is about the registration piece, and you can definitely get in touch with a forum who can help you with the steps in detail about how the registration needs to be done. And the registration is mandatory. You need not wait till you have something suspicious. FIU requires you to register, immediately. Okay, so coming back to where we were, which is the match that if we get in a sanctions list or in a PEP, as I've told you, you can go ahead and do the business with a particularly exposed person. It is only that written approval from the senior management is required and needs to be kept on record. The next that we have is a very specific compliance which is related to capturing the ultimate beneficial owners. As a part of KYC, we are already capturing complete demographic details of the customer. We are collecting documents, supporting documents. In case of non-individual accounts, we are also having financial documents. In case of derivatives also, we are taking the income of the customer and some supporting proof. So all of these information is very useful for PMLA, but we also require, if the account is a non-individual, say for example a corporate like a private limited company, then you need to take the ultimate beneficial owner details. That is, take the shareholding pattern of the company, but within that, if there is another corporate shareholder, then you need to know that who are the ultimate beneficial owners of the company which is trying to open an account with you. So if you have ABC Private Limited, within that, if 80% of shares are held by PQR Private Limited and PQR Private Limited is owned by P, Q and R individually, then PQR are the ultimate owners in ABC. So these are the key people as far as you're concerned, because these are the ones who ultimately own or control the account. It is also important to screen these ultimate owners through the screening process. Okay, so once you have decided that the customer has completed screening, you then move on to categorizing customers in special category if need be. So the circular talks about 9 types of special categories. You need to see whether a customer fits into any of those 9 categories. If yes, you need to put a flag on that customer that yes, this is a special category customer. Just to give you an example, special category, a trust account is a special category account. We have, even a special category called close family. So if you have 2 corporates, both are having an account with you and they both have, the same owners, or you have a few owners which are common among the 2, then both of those companies or both those accounts will also be flagged as close family, which is nothing but a special category. This actually helps you identify that, okay, out of X thousand customers that you have, these are few hundreds which are actually special category customers. So when you're doing your due diligence, you need to do enhanced due diligence for these set of customers. We then have, a risk profiling which needs to be done. This means every customer that you onboard needs to be put in a low risk, a medium risk and a high risk. There's something very important I would like to tell here is money laundering risk is different from financial risk. If you as a broker are expecting that, let's assume that you have a client and there is a market fall today of 500 points and the client has a derivatives position and there is a big M2M in it, and in the evening you realize that he doesn't have the money to pay you. So that's one client. The other one, comes in and has, let's say, an income range of 1 to 5 lakhs and he takes a position of 2 crores and gives you a margin of complete 50 lakhs or 75 lakhs that may be required. And in terms of financial risk, the one who's not giving you the money or does not have money for his M2M losses could be a high risk because he doesn't have the money, and the one who's giving you complete money and margin and M2Ms could be classified as low risk as far as a financial risk is concerned. But the money laundering risk, is different. The customer who's bringing so much money, the principal officer may ask and say, okay, you are having an income of 1 to 5 lakhs, your occupation is service, and your age is 24, and you seem to be working in a small company as an accountant. How do you manage to get 75 lakhs worth of margin? It's possible that the organization should classify this particular customer as medium risk, and although the financial risk is low because he's bringing money in advance. After the risk categorization, we now understand that the customer will start doing transactions with you. And that's when the transaction related alerts come in. I'll take a very simple example for this. Unconsciously we are all doing some kind of a monitoring within ourselves. Let's take an example. You have a customer who walks in every day to the branch and buys 25 Reliance in the morning. After some time he squares it off or he buys a delivery. This happens continuously. One fine day he comes up to the branch and tells the dealer, buy 2000 Reliance Industries. And the dealer will be like, are you sure? Did you just say 2000? He'd be like, yeah, just go ahead and buy. He'd say, no, sorry, we can't buy more for you. If you want, then you give us margin or you give us the complete money advance. And the customer says, okay, give me your bank details. And in 4 hours, there's an RTGS to buy, this stock particular worth 50 lakhs. And the next thing that the dealer does is he calls up his head and says, that customer, John, who comes every day, all of a sudden, bought, X thousand Reliance today and he just paid us 50 lakhs. And that is nothing but an alert, correct? So what you did is, the dealer was monitoring or unconsciously knowing that this customer has a size of just 25 Reliance. Today, all of a sudden, there was something unusual and he ended up taking a big amount of quantity. So that call that he made to his boss or the chief dealer and told him, that is nothing but an alert. Now, what is investigation? So once it comes to the risk manager, he will say, okay, fair enough, he's got the money. Let us try to understand what his source of money is. So they try to speak to him and say, okay, nice, we've bought Reliance for you, but can you tell us, like, what is your strategy, or how did you manage to get so much investment? And he says, don't worry, you just keep doing this and now this is going to happen in a big way. But he doesn't give you much details. Doing more and more interaction, the customer just wouldn't give up why it is like that. Then that is suspicious, correct? But imagine if the customer says, okay, I had a maternal uncle who just passed away and he left me so much money in his will. Now that is fine. So you can close the alert. So he can say, okay, no worries, the matter ends there. Now this is what is an alert. The discussion with the client is an investigation or the due diligence, and the outcome, as I told you in both the examples, one could be suspicious because the customer is not ready to give you any details and you don't understand how the money came to him. And the other one was very simple because he told you this is what it is and maybe and you've closed it. So friends, very similar to this, you need to have maybe a manual system or some mechanism or a solution through which you could create these kind of alerts, and there could be a team which could look at these alerts, and if they find it suspicious, they can give it to the principal officer, and the principal officer also finds something unusual, they can report it to the FIU. I would like to tell you some very key things, as we end now in the next 1 minute, is that whenever you file an STR or whenever you're doing an interaction with your customer, do not tip off the customer and let him know that what you're doing is under PMLA or there was an alert in the PMLA system. You are only supposed to interact and get more details without tipping off the customer. The second most important thing is you continue doing business with your customer. You do not tell him no, because it is you who think it is suspicious, but it is for the agency to decide whether there is anything unusual or not. So you flag it off, create an STR, send it to FIU, and then you continue doing business with the customer without telling him that you ended up filing an STR for him. Take a theoretical example. You filed an STR for that customer. He then goes to the casino, spends a lot of money there, settles in cash. Maybe the casino files an STR, goes to a cooperative bank, puts money there, maybe they file a report, and it's possible that FIU may start investigating this customer for multiple reasons. So friends, this is in a very brief about what AML is. SEBI has issued a master circular dated 31st December 2010, and you can get all your details there. I think it's more about practicing. It's more about getting into the details, and gradually this subject which we all unconsciously practice will come in spirit in the form of compliance, and make sure that whatever you do under this subject is recorded pretty well, so the bookkeeping is done well, so that you can convince the auditors and the people who come for inspection that you have a good AML compliance program in place. With this, I would like to thank you very much for listening to me.